The Trump administration has made bold moves by imposing tariffs on various countries, aiming to protect domestic industries and level the playing field in global trade. But what do these tariffs mean for the economy? Let's break it down. On February 15, 2025, President Trump announced new tariffs on countries using value-added tax systems. This affects the European Union, India, and Japan, regions with high VAT rates averaging around 22%. The administration says this move is all about fairness and reciprocity. But critics warn it could raise consumer prices and spark retaliatory measures. Next up, reciprocal tariffs. Signed on February 13th, this plan matches the tariffs that other countries impose on U.S. goods. The goal? Eliminate trade imbalances and pressure countries into new trade negotiations. But there's a risk. This could trigger a trade war and lead to price hikes for consumers and businesses. In a major escalation, a 25% tariff on steel and aluminum imports will take effect on March 12th. Countries like the European Union, Canada, Brazil, and Japan have already condemned the move, promising retaliatory actions. So what's the economic impact? Tariffs can lead to higher prices for everyday goods, inflationary pressure, potentially raising the cost of living, job losses in industries reliant on imports. Analysts estimate these tariffs could reduce U.S. GDP by up to 0.3% in the long run and potentially lead to the loss of over 100,000 full-time jobs. And the risk of escalating trade wars looms large. A cycle of retaliatory tariffs could disrupt global trade and slow economic growth. This isn't the first time tariffs have made headlines. Previous administrations used tariffs strategically, but Trump's moves echo the trade war of 2018 to 2019 with China. Back then, tariffs raised prices on goods and led to significant job losses. Certain industries are more vulnerable than others. Manufacturing and agriculture, which rely heavily on exports and imported raw materials, could be hit hardest. Meanwhile, companies that import electronics and consumer goods may have to increase prices or absorb losses. How are other countries responding? Many nations, including the European Union and Canada, have threatened retaliatory tariffs on American goods, which could target industries like agriculture or tech. Back home, reactions are mixed. Some lawmakers and unions support the tariffs, believing they protect American jobs, but others warn that higher prices could hurt low-income families and small businesses. Global supply chains are also at risk. Companies may diversify or shift production to avoid tariffs, leading to potential delays and higher costs for consumers. Could this drive a trend toward reshoring production back to the U.S.? Time will tell. Markets are already reacting. Stock prices for companies reliant on international trade have dipped, while investors brace for potential inflation. While these tariffs aim to protect U.S. industries and bring balance to global trade, they come with significant economic risks. Rising prices, potential job losses, and strained international relations are all on the horizon. How will this all play out? Much depends on how other nations respond and how businesses and consumers adapt to the changing landscape. Thanks for watching. Don't forget to like, share, and subscribe for more insights.